Welcome to a journey of knowledge, protection, and financial confidence. In this course, you'll learn how to choose the right coverage to protect your future. Insurance made simple, because protecting what matters should never be complicated.
Welcome to OC Insurance Academy. Here, we make insurance simple, clear, and easy for everyone to understand. Hello and welcome to this new insurance lesson. Today, we will learn how insurance protects your health, your family, your property, your income, and your future. In this lesson, you will learn why insurance is not simply an expense, but an essential form of protection for life.
So insurance helps prevent people from paying for major losses entirely on their own.
Exactly. Insurance allows people to share risk with an insurance company, reducing the financial burden of unexpected events. For example, if a hospital stay costs $50,000, a good health insurance plan can help cover a significant portion of those expenses, depending on the policy terms. Insurance does not stop life's problems from happening. However, it helps you remain financially stable when they do occur. Insurance protects your health, family, property, income, and provides peace of mind. Remember this: a good insurance plan can protect what you have worked hard to build over many years. Now ask yourself this question. If an unexpected event happened today, would you be financially prepared? Take a few minutes to think about your personal situation. Insurance should always be selected based on your individual needs and goals. The assignment is on the screen. Thank you for joining us for this lesson at OC Insurance Academy. In our next lesson, we will explore how insurance companies evaluate risk and determine insurance premiums. Welcome to Lesson 2, Why Everyone Needs Insurance. We protect our health, family, and assets.
It provides peace of mind.
Exactly. It brings security and stability. See you in the next lesson. Welcome back to OC Insurance Academy. In today's lesson, we'll learn about risk, why it matters, and how insurance companies use risk to determine premiums and provide financial protection. Before insurance companies can protect people, they must first understand risk. Risk is the possibility that a loss or unexpected event may occur. This could be a car accident, a medical emergency, a house fire, or a business lawsuit. Every day, we face risks. Some risks are small, while others can have serious financial consequences.
So risk means something bad might happen that costs money?
Exactly. Insurance exists to help people manage those financial risks. Insurance works because many people share risk together. Everyone pays premiums into a common pool. Only a small percentage of people will experience major losses at any given time. This concept is called risk pooling. Insurance companies collect and analyze large amounts of data. They study patterns to predict how often claims may occur.
So insurance companies don't just guess?
Exactly. They use data like age, driving history, and claims history to predict risk. The process of evaluating risk is called underwriting. Underwriters review information about applicants before deciding whether coverage will be offered, what the premium will be, and what conditions may apply. Not everyone pays the same premium. People with lower risk often pay less. People with higher risk usually pay more.
That explains why younger drivers often pay higher auto insurance rates.
Exactly. Insurance pricing reflects the likelihood of future claims. Even insurance companies need protection. They purchase coverage called reinsurance. Reinsurance helps companies handle major disasters such as hurricanes, floods, and large-scale catastrophes. Imagine a hurricane damages thousands of homes. Claims total hundreds of millions of dollars. Reinsurance helps insurance companies pay those claims while remaining financially stable.
So reinsurance helps protect policyholders too?
Absolutely. It helps ensure claims can still be paid after major disasters. Understanding risk is the foundation of understanding insurance. For today's assignment, choose one type of insurance and identify 3 factors that could increase or decrease risk. Think about how those factors might affect premiums. Thank you for joining us at OC Insurance Academy. In our next lesson, we'll begin Module 2 and explore the fundamentals of health insurance. See you in the next lesson. Welcome back to OC Insurance Academy. Today, we begin Module 2 by exploring one of the most important forms of protection available, health insurance.
I'm excited to learn about it.
Excellent. Let's dive in. Health insurance helps protect you from the high cost of medical care. It provides financial assistance when you need doctor visits, hospital care, prescriptions, surgeries, and other healthcare services. Most people will need medical care at some point in their lives. Without health insurance, even a simple medical emergency can create significant financial stress. That's why health insurance is so important.
Is healthcare really that expensive?
Yes. A single emergency room visit or hospital stay can cost thousands of dollars. Health insurance helps reduce those expenses. Imagine being hospitalized after an accident. Your bill could easily exceed $25,000. Health insurance can help cover much of those costs, depending on your plan. Every health plan is different, but most plans help cover these essential healthcare services. Health insurance is not only for emergencies, it also helps you stay healthy through preventive care.
What is preventive care?
This is preventive care, catching problems before they start.
I see, it's about staying healthy.
Preventive care includes annual checkups, screenings, vaccinations, and wellness visits designed to detect problems early before they become serious. Everything looks great. Your blood pressure is perfect. Health insurance involves shared costs between you and the insurance company. You may hear terms such as premium, deductible, copay, coinsurance, and out-of-pocket maximum. Let's look at some key health insurance terms: premium, deductible, copay, coinsurance, and out-of-pocket maximum.
Will we learn those terms in detail later?
Absolutely. Each of these concepts will be covered in upcoming lessons. One of the greatest benefits of health insurance is peace of mind. Knowing you have coverage allows you to focus on your health rather than worrying about overwhelming medical bills. Health insurance is not just a healthcare tool. It is also a financial protection tool. It helps pay medical expenses and protects your finances from high costs. This coverage brings peace of mind. Think about this question. What would happen if you or a family member needed emergency medical treatment tomorrow?
Without insurance, paying those bills could be extremely difficult.
Exactly. Health insurance helps protect families from those financial challenges. For today's assignment, research one healthcare service such as an emergency room visit, surgery, or hospital stay. Estimate the cost with and without health insurance. Thank you for joining us for this lesson at OC Insurance Academy. In our next lesson, we'll explore the different types of health insurance plans, including HMOs, PPOs, EPOs, and POS plans. Your assignment is on the screen. Welcome to Lesson 2. Why does everyone need insurance? To protect your health, family, assets, and income. Insurance gives you peace of mind and security. See you in the next lesson. Welcome back to OC Insurance Academy. Today, we will learn about the 4 most common types of health insurance plans and how to choose the one that best fits your needs. Not all health insurance plans work the same way. The 4 most common types are HMO, PPO, EPO, and POS. Understanding the differences can help you make better healthcare decisions. An HMO plan requires you to select a primary care physician, often called a PCP. Your PCP coordinates your healthcare and usually provides referrals when you need to see specialists. This is illustrated in the flow chart on the screen. Let's look at health maintenance organizations, or HMOs.
What happens if I see a doctor outside the network?
In most HMO plans, services received outside the network are generally not covered except during emergencies. HMOs can be a great choice for people looking for lower costs and coordinated care. Let's look at the advantages and disadvantages. Lower premiums and coordinated care are key benefits. A PPO plan offers more flexibility. You can visit specialists without referrals and receive coverage both inside and outside the network.
That sounds more convenient.
It is, but that convenience often comes with higher premiums. PPO plans are popular among people who want more freedom when choosing healthcare providers. The advantages include greater flexibility and no referrals needed. However, premiums and out-of-pocket costs are higher. An EPO plan combines features of HMOs and PPOs. You generally do not need referrals to see specialists. However, you must stay within the network to receive coverage except in emergencies.
So it's flexible, but only within the network.
Exactly. A POS plan combines features of both HMOs and PPOs. You choose a primary care doctor and often need referrals for specialists. However, some out-of-network coverage may be available. Each plan offers a different balance between cost, flexibility, and provider choice. The HMO is low cost but requires a referral and is network only. The PPO is higher cost but offers more flexibility with no referral needed. Choosing the right health plan depends on your personal needs. Ask yourself, do I want lower premiums? Do I want maximum flexibility? Do I frequently visit specialists? Do I have preferred doctors? So there isn't one perfect plan for everyone?
Exactly. The best plan is the one that fits your healthcare needs and budget.
Understanding your options is the first step toward making informed healthcare decisions. HMO plans have lower costs, more referrals. PPO plans offer maximum flexibility. PPO's plans combine features of HMO and PPO. For today's assignment, compare the 4 plan types and identify which one would best fit your lifestyle and healthcare needs.
Okay, the HMO, PPO, EPO, and POS plans.
Which plan would you choose and why?
I think I would choose the PPO because the flexibility.
Thank you for joining us for this lesson at OC Insurance Academy. In our next lesson, we'll explain important health insurance terms such as premiums, deductibles, copays, coinsurance, and out-of-pocket maximums. Welcome back to OC Insurance Academy. Today, we will learn 5 important health insurance terms that every policyholder should understand. Many people purchase health insurance without fully understanding how it works. To make smart healthcare decisions, you need to understand 5 key terms: premium, deductible, copay, coinsurance, out-of-pocket maximum.
I've heard these terms before, but they always seem confusing.
Don't worry. By the end of this lesson, you'll understand each one clearly. A premium is the amount you pay each month to keep your health insurance active. Think of it as your membership fee.
Do I pay the premium even if I don't visit a doctor?
Yes, the premium is paid whether or not you use healthcare services. So the deductible is the amount you pay before insurance begins sharing costs.
So I have to reach the deductible first?
Exactly. Once you meet the deductible, your insurance begins sharing costs according to your plan. A copay is a fixed amount you pay when receiving specific healthcare services.
So the amount stays the same each time?
Correct. Copays are usually fixed amounts listed in your policies. After meeting your deductible, you and the insurance company often share healthcare costs. This shared percentage is called coinsurance.
So coinsurance is based on percentages instead of fixed amounts?
Exactly right. The out-of-pocket maximum is one of the most important protections in your health plan. It limits how much you have to pay during the year for covered services. For example, it could be $6,000. After reaching the limit, insurance pays 100% of covered services.
So there is a limit to what I can spend?
Exactly. Once you reach the maximum, your insurance pays the remaining covered costs for the rest of the year. Let's see how all 5 terms work together: monthly premium, copay, deductible, coinsurance, and out-of-pocket maximum.
Now I see how everything connects.
That's exactly how health insurance works in real life. Imagine Sarah has surgery costing $20,000. Her plan includes premium, $350 per month, deductible, $1,500. Coinsurance, 20%. Out-of-pocket maximum, $5,000. Sarah pays her deductible and coinsurance until she reaches her maximum. After that, the insurance company pays the remaining covered expenses. Understanding these 5 terms helps you choose the right plan and avoid unexpected healthcare expenses. Premium is your monthly cost, deductible is the amount you pay first, copay is a fixed fee, and the out-of-pocket maximum is your spending limit. Which of these terms do you think is most important?
The out-of-pocket maximum, because it limits how much I can spend.
Excellent answer. Understanding your financial protection is essential. For today's assignment, review a sample health insurance plan and identify the premium, deductible, copays, coinsurance percentage, and out-of-pocket maximum. Explain how each affects healthcare costs. Thank you for joining us at OC Insurance Academy. In our next lesson, we'll explore provider networks, in-network versus out-of-network care, and how provider choices affect healthcare costs. In conclusion, insurance protects your health, family, income, and gives peace of mind. Thank you for joining us today at OC Insurance Academy. Remember, learning today, protecting tomorrow.
Thank you for learning with OC Insurance Academy. See you in the next lesson, Medicare 101 Explained.